Everyone's always saying, no matter what, you need to be diversified with your investments. But I'm here today to tell you that that's not always true. And I'm also here to talk to you about how do you know if that applies to you, how to know when that's true and when it shouldn't be true. So in this video, I'm going to break down exactly what diversification is, and I'm going to break down my honest thoughts on diversification, and you'll be able to know, you listening to this from your screen, if you should be diversified or not, and why, how much, when, literally all the details that you'll need on this topic of diversification, because it's something big that comes up when it comes to investments. And I made the mistake of listening to everyone say it, and I paid the cost in the form of foregone opportunities. So without further ado, let's get into the content. And I ask, if you get value, consider subscribing, drop a like, share it with a friend, comment, and offer any feedback or anything that I may miss in the video. All right, so to start, let's define diversification. The word diverse means a great deal of variety. So as that pertains to investments, that means having a diverse portfolio with different investments inside of it. But as you'll see in this video, and people don't really talk about this a lot, diversification actually has a lot of different modalities. So you have diversification of different asset classes, which I agree that you should be diversified here. Diversified across stocks, bonds, precious metals, crypto, commodities, etc., etc. So before I jump into the next modality of diversification, let's talk about why I think you should always be diversified when it comes to different asset classes. And to talk about this, we're going to look at Ray Dalio's all-weather portfolio. These are my notes from Money Master the Game. I read this book back in like 2016 or something like that. I take notes on all the books that I read, so the important stuff always sticks with me, or if it doesn't, I can always refer back to it. But Ray Dalio says that it's 4 factors that influence the economy. The first one is higher than expected inflation, which causes a rise in prices. Number 2 is lower than expected inflation or deflation. The third one is higher than expected economic growth. And the fourth one is lower than expected economic growth. And it says here, if there are 4 potential economic environments or seasons, because this is an all-weather portfolio for all seasons, Ray Dalio says that you should have 25% of your risk in each of the 4 categories. All right, and the point is not to plan for a specific season or pretend to know which season is coming next. Is to be positioned so that whatever season comes, because it's not like spring, summer, winter, fall, like they come in order. They kind of happen irregularly. So for rising economic growth, you want to be in stocks, corporate bonds, commodities, and gold. And this makes sense because, stocks are a risk on assets. So when the economy's rising, that means businesses are making money. So stocks are probably going up. And corporate bonds are probably going up too, because corporations who are experiencing the growth are going up as well. And usually gold is just like an inflation. So it's like you still want to be hedged in some way. For falling growth, you want to be in treasury bonds, or what are called TIPS, which stands for Treasury Inflated Protected Securities. And basically, you want to be in treasury bonds because normally when the economy is like slowing down, it's normally having something to do with the Federal Reserve. So they're probably raising interest rates. So interest rates are high. So treasury bonds are paying out like really, really nice. And this is kind of the state that we're in now. Like the yield on the short-term treasuries last time I checked was like 5% per month. When you have rising inflation, you want to be in commodities, gold, and also treasury inflated protected securities. Remember, these TIPS are bonds that pay out a yield based on inflation. So as inflation is rising, so is that yield. And I'm not a commodities expert, so I can't even tell you why you should be in commodities once inflation is rising. And then once inflation is falling, you want to be in, Ray Dalio says, treasury bonds as well as stocks. And he breaks down like the portfolio percentage of what he would put what in. So it's like, I think you should be diversified when it comes to different asset classes, because, if you're just all in crypto and have like lowering inflation, like how we had this past like year and some change, because the Federal Reserve has been just raising rates, you missed out on a lot of money. You saw the stock market just going crazy. You saw these bond yields going up, so you would have missed out on a lot of money. So this I agree with. But a lot of people don't understand this kind of stuff. So that's why this is why people go to institutions like mutual funds and sometimes hedge funds, because you want to give your money to an expert who you trust to essentially grow your money regardless of what's happening in the overall economy. Okay, so the next modality is diversification within the same asset class. Okay, and this is the one where I don't fully agree with, and I'll tell you why. So people say if you're investing into the stock market, you want to be diverse across multiple stocks, or if you're investing in crypto, you want to have Bitcoin, Ethereum, altcoins, some stable coins, da 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 da. And you know, there's some truth to that, but I always say your level of diversification should be totally dependent upon how good of an investor you are. Now, how good of an investor you think you are, like how good you are at researching and putting together an investment strategy to look at the competitors, look at the price to earnings ratio, or look at the TVL if you're investing in crypto, look at the market cap, look at the fully diluted valuations, know how to analyze tokenomics, know how to realize what problems they're solving and how well they're solving them compared to the competitor, and be able to give them a score. Like if you know how to do that kind of thing and you find a project that you feel like is a gem and you're convicted on it, and here's another important thing, depends on how much time you have to allocate towards the skill, because investing, it's not a hobby. It's like some people make a living off of this. And while everyone should invest, everyone shouldn't invest the same, because if you don't have a lot of time to invest and you try to go picking stocks or picking crypto, a lot of times if you don't have time, you can't do the full research. So you're probably just taking a hot tip or listening to a friend. Guys, I've lost most of my money taking other people's words on what I should buy, and I've made the most money once I did my research and I bought something I was convicted on. Because when you're convicted on something, that's what's going to be able to enable you to weather the storm, the inevitable storms, because every project or company goes through storms. You'll be able to identify, like when the price dips, if you're just taking someone's words, you're probably going to sell. But if you did your own research, you may look at that dip as a buying opportunity, right? So I say, if you don't have a lot of time to invest, well, obviously, you know, we're experts here. We give our buy and sell calls and our research, and we show you how to generate passive income. If you want to make money in crypto and just investing, period, click the link in the description and book a free strategy session. But anyway, if you don't have a lot of time to allocate towards investing, it may be a good idea, or it is a good idea, to be diversified and buying a few plays that maybe may not make you as much money, but aren't as risky, so that, you know, your network doesn't just take a nosedive. So it may be a good idea to buy something like the S&P that gives you broad exposure to multiple stocks, so that if one of them goes down, like I said, your net worth doesn't just take a shit. But if you have time to research, it's not bad. It's not a bad idea to go all in on a few, because the more diversified you are, also, the more projects you have to keep track of. One of my favorite quotes from Warren Buffett is that diversification is insurance for idiots. There's multiple ways to skin a cat. Like, you can make a lot of money from being diversified. I just would say, if you're diversified and you have a lot of time to invest, make sure you're keeping up with what's going on, because sometimes you might have to get out, but sometimes it may be a good time to buy, like I said earlier. But Warren Buffett famously got rich. I read his biography, Snowball. It's called Snowball because he started off selling like Coca-Cola. I think it was bottle caps. He was taking that money and then he reinvested into pinball machines. He took that money. He eventually started his hedge fund in Buffett Associates, I think it was called. And he was famous for looking for cigarette butts, like stocks that were trading below their price to earnings ratio. But he famously was holding like 2, 3, 4 stocks at a time. But he researched all of them, right? So this is a guy who made a living off of investing, but he wasn't diversified. When he knew about all of them, he could have been like, oh, this stock's good, this stock's good, this stock's good. But no, he only stuck with a couple, and he became a billionaire that way. Guys, I'm going to tell you a story on how diversification messed me up. In 2019, you know, I really got serious about investing into crypto. I had been investing since 2017, but 2019, I became really serious. Like, got some blockchain certifications, joined investment groups, the whole nine. I learned about Chainlink. I read their white paper, and I knew in my heart, from my research, and in my brain, because heart sounds like, oh, you're emotional. I knew that this project's going to perform well. This is like the plummeting crypto. I understood the tokenomics. I understood everything. But I was listening to everyone else who was saying, oh, be diversified. So I was holding like 15, 20 different projects. I didn't have a take profit strategy. I thought I could time the top. You know, that's another important thing. You want to make sure you know when you're getting out before you get in. But this is a video on diversification, so I'm not going to dive into that. But I was buying Chainlink when it was like $92. It went all the way up to $52. I could have made way more money if I would have just believed in my research and believed in myself and been all in or more all in on Chainlink. Just because you have a lot of time to invest doesn't mean you should go all in on one single project, even though, hey, if you believe in it, do it. Some people did that with ETH, some people did that with Bitcoin, and they did well, depending on if they had a take profit strategy. But I bought all these projects, didn't know when I got in, didn't know when to get out. And yeah, I made some money, but I could have made way more if I would have just stuck with Chainlink. So now this bull market, guys, I'm only in a few projects. A handful of projects. And these are projects that I believe in. I'm able to easily keep track of them. Got my take profit strategy. Like everything else is streamlined. All right. So just to put a bow on this, your diversification ratio should depend on how good of an investor you are and how much time you have to allocate to researching, investing, and managing your investment. Because it's not just one thing to buy it and wait for your take profit strategy. You got to keep a lookout for the news, stock splits, whatever the asset you're investing in or company you're investing in. You want to, keep tabs on it because your money's on the line. All right. So I'm going to end it with one saying: research leads to conviction. Conviction leads to patience. And patience leads to wealth. Guys, when you're investing, you're getting paid to be patient. So with that, I'd like to conclude this video. If you want to become a better investor, like I said, click the link in the description, book a free strategy session with one of our Know It Alls team members. But with that, I thank you guys so much for tuning in. Consider subscribing if you got value, like I said. But with that, I love every single one of you who are watching. Thank you for tuning in, and I'll see you on the next one. Take care.